Good morning, good afternoon, or good evening, depending on where you are joining us from in the world today. We've got about 70 attendees and ticking up, so we're going to get started with our webinar. I'm Ashley Onyango, the Head of Financial Inclusion and Agri-Tech at the GSMA, and I'm delighted to welcome you to this panel webinar today entitled Mobile Money, Thriving in a Year of Global Upheaval. Nearly 3 weeks ago at our launch event on this year's State of the Industry report, we highlighted specific trends that have emerged from the industry in the last year. 2020 was no mobile money industry. The year brought about new challenges, some of which could persist into the new decade. In response to the COVID-19 pandemic, the industry acted with speed and agility to respond to an unprecedented economic and social reality. Mobile money played a key role in keeping people connected, delivering financial support, and providing safe, contactless payment options for essential goods and services. For millions around the world, mobile money became a part of their new daily routine, their new normal, if you will. 2020 also saw increased collaboration. By working with governments and NGOs, the industry managed to deliver social and humanitarian assistance quickly and efficiently. Despite a global economic downturn, the amounts transferred via mobile money continued to grow. For the first time, the value of mobile money transactions exceeded $2 billion a day and is expected to surpass $3 billion a day by the end of 2022. This is remarkable growth. In many markets, the pandemic also served as a catalyst for regulatory changes that had previously been delayed, including simplifying and streamlining processes to make it easier to sign up for mobile money accounts. Looking forward, whether the pandemic will have a lasting impact on the use of cash, digitization on consumer behavior remains to be seen. Throughout 2020, the mobile money industry has proven itself resilient, especially in response to sudden and unpredictable change. Here's a brief video that highlights some of the key numbers from this year's report. Great. In today's webinar, we will hear more from mobile money the wider ecosystem about the industry's evolution in the last year. Our panel will be moderated by Greta Bull, the CEO of the Consultative Group to Assist the Poor, also known as CGAP, and a director at the World Bank Group. Greta has 20 years of experience in development finance, primarily focused on small and medium enterprise finance, microfinance, and digital financial services. She has worked with both financial service providers and policymakers in Latin America, Central and Eastern Europe, Sub-Saharan Africa, and South Asia. With that, it is my pleasure to hand this virtual mic over to Greta to kick off the panel discussion.
Great. Thank you so much, Ashley, and a good morning, afternoon, and evening to all of our guests, wherever you are in the world. It's been quite a year for all of us and for the mobile money industry in particular. A year full of challenges, but one in which mobile network operators provided a lifeline for many people. How will the events of the last year change the industry? What are the challenges and the opportunities that lie ahead? That is what my distinguished panel is going to help me explore today. I'm joined by three leaders in Africa's mobile money industry, so let me introduce them now. I'll start with Angelica Pesha, who's the Chief Officer for Mobile Financial Services at Millicom in Tanzania. She's led large cross-functional teams and has spearheaded several Tigo Pesa initiatives, including interoperability, GSMA mobile money certification, landmark strategic partnerships, and numerous innovative services in enhancing customer experience. Next up is Chris Williamson, the Managing Executive for M-Pesa at the Vodacom Group. In this role, Chris is responsible for driving the growth and evolution of M-Pesa, Africa's biggest payments platform with over 40 million active customers. And they are all across Africa, including the non-Kenya footprint that's in Tanzania, Mozambique, the DRC, Lesotho, and Ghana. Chris has over 15 years of experience spanning telecoms, technology, and financial services, predominantly in African markets. Finally, we have Dare Akuju, the founder and CEO of MFS Africa, a leading Pan-African fintech that operates the largest digital payments hub on the continent. The MFS hub connects over 320 million mobile wallets in sub-Saharan Africa. Prior to MFS, Dare worked at MTN Group, where he developed and implemented the company's mobile payment strategy across 21 countries in Africa and the Middle East. So I'd like to welcome all of my panelists. As you can see, if anyone can answer these questions for us, it is my panelists today. So before we get started in the discussion, I'd just like to remind the panelists to remain on mute when not speaking so we don't pick up any stray background noises. And I'll remind the audience that we'll be taking questions throughout. So for those listening in, please feel free to post your questions in the Q&A panel and I'll try to weave them into the conversation. You'll find the Q&A button on the right-hand side of your screen. So without further ado, let's get to our panel. And I'd like to start with a couple of questions about the theme of 2020, which was embracing disruption and building resilience. And that's been pretty crucial throughout the last year. So Angelica, let me start with you, and then we'll make a circle around the panel. In the State of the Industry report, many providers highlighted difficulties arising from a general decline in economic activity in their respective markets last year. That's something that we've experienced pretty much everywhere in the world, thanks to COVID-19. What measures did your business implement to get through the crisis, and to what extent have your providers or have providers in your market, Tanzania, recovered from the crisis? Angelica, I think you're still on mute.
I'm not. Hi, can you hear me?
Yep, can hear you fine.
Okay. Hi everybody. I think, thank you, Greta. As you've introduced, 2020 was really a very different year and very challenging for most of us in the world, and especially in businesses. And I would like to say, with the challenges that come with 2020, maybe it was a blessing in disguise for mobile money as we moved later into the pandemic. So at the beginning of the pandemic, we saw business slow down across different sectors, including mobile money. But as we moved forward, especially in Tanzania, we were able to see mobile money becoming more critical than it has always been. So this posed as a lifeline, as you've said. So we became more critical, and we were one of the critical services in the country that had to keep running in order to keep the economy in motion. So with a lot of people not moving as much, with people not able to go to work so much, as a country, we were not on a total lockdown, but still we had different impacts from different businesses. And for us as a mobile money business, especially in Tigo Pesa, we managed to use this as an opportunity for us to stay relevant. We managed to implement a number of activities and actions in order to make sure our customers were able to get the services. So I would put this into maybe 3 or 4 main points. as the activities that measures we implemented. The first and foremost was to ensure our systems were available. So as we're becoming more critical, it became more important, and we had to be available. We had to have our systems in place to be able to support our customers at every point. So as the pandemic became a bit more severe, we saw less movement and more e-value in our ecosystem. So we had to make sure we're able to support these increasing transactions. One main thing is working with our agent network. We had to make sure we had agents who were able to continue transacting. So we have a lot of people closing their shops. People are unable to really do their daily activities, but we had to go to our agent network and ensure we are strategically ensuring different places we have availability, and we are able to support the liquidity of these agents. And not only that, but to support them in order to to stay safe. So we had to work with them in order of creating awareness of how do you stay safe as you're serving customers, ensuring there's water and buckets and soap before customers can really wash their hands to keep them as safe. So there's a lot of engagement and communication with our agent network. And maybe another point is on the regulatory front. So we had to really do a lot of engagement with our regulators in order to see how do we support the increasing demand of mobile money. So one of the key blessings in disguise was we're able to get our regulators to listen to us and act even faster. So for Tanzania, we're able to get increased limits. So it's something that we've been engaging regulators for some time, but until the COVID crisis, this is when they realized, and they really were very, very supportive. We increased our transactional limits and our daily balance limits almost double to what was there before the COVID. So this was very, very good in terms of regulatory engagement. And maybe finally on the customers was more of awareness. On a daily basis, we communicate to millions of customers. So from our side, ensuring we are able to tell customers how to stay safe was one of the key awareness that we carried in terms of customer communication. So I think that sums up measures that Tigo Pesa took in order to continue and support our customers during the crisis. Thank you.
Great. Thank you, Angelica. Chris, let's turn to you, and you oversee operations in a number of countries. Can you tell us briefly what measures you took to manage through the crisis and how things are looking a year on?
Certainly. That's a great question. So I think a crisis like this really highlights the importance of collaboration and cooperation between the private sector, both individual players and within the industry as a whole, as in Tanzania, and also with government and wider civil society. So I think overall there's been an incredible commitment from the mobile money industry to make it as easy as possible to keep everyone transacting digitally and actually to minimize cash handling. So in close consultation with the regulators in the markets I oversee, which, by the way, it's all the M-Pesa markets outside Kenya, so about 17 million active customers we have now in those 5 markets. So we implemented a lot of different measures. We made P2P bank transfers and some merchant payments free, completely free in most of our markets. As in Tanzania, as Angelica's mentioned, in most of our markets, we're also able to, with the approval of the central bank, pretty much double our balance limits and our transaction limits for all of our customers, and also in many cases for our agents. On the distribution side, we made huge efforts, which I think Angelica's described, what Tigo did in Tanzania, very similar, huge efforts to make sure our agents could stay operational and liquid. So there are all kinds of things there, lobbying to make sure they'd be declared essential services so they could stay open, providing means to get cash and e-money to and from the agents. We also distributed a lot of protective equipment for our agents who still, need to be able to facilitate cash in and cash out of the mobile money ecosystem in order for them payments to be digitized. So, they would be at risk given the volume of cash they're handling. So we distributed money for soaps and also in some cases physical supplies of, for example, in Mozambique, we delivered 30,000 hand washing stations with like 25-liter buckets and sanitizer to all of our agents in the country. So huge range of measures. That's just on the M-Pesa side. As a business overall, we did many other things like giving airtime, SIM cards, and thousands of devices to healthcare workers, and zero rating all kinds of content, particularly things like academic websites. In terms of the impact this has had on a business, clearly it's been a year unlike any other. And I remember very well this time exactly 12 months ago, Greta, when we were looking at the numbers and, the volume drop in transactions we experienced initially when we had hard lockdowns in many of our markets, and also over the longer term, just very weak economic conditions. It was really scary. The volume really was very impacted very hard in Q2 of last year. We also, lost a lot of revenue because of these price drops that we implemented in order to ensure no one would be ruled out of transacting digitally. In some cases, markets are still experiencing these kind of challenges. So, for example, the Lesotho is still still quite disrupted, and they have had a level 5, highest level lockdown through the whole month of January. So it's certainly not over. And given the status of vaccinations across Africa, it's going to be some time until we see things really recovering back to normal. But overall, I think similar to Angelica, in many markets, we've seen not just a return to normal, but actually a bounce back to where we were and beyond. Maybe we'll talk about it later, but certain use cases in particular, P2P transfers, merchant payments, business payments, there are many areas where we've had a huge amount of volume growth. I think a lot because customers are realizing the benefits and the safety of switching to mobile payments. So for M-Pesa in the Vodacom markets, the last 2 financial years, I'm proud we grew revenue by almost exactly 30%, which I think is phenomenal. This year will not be the same as the whole fintech industry globally has experienced, but certainly things are looking very bright for the future.
Great, thank you, Chris. I think there will be a lot to dig into on specific use cases later as well. Dari, for MFS Africa, what does the picture look like? How did you support your different clients, and what's the recovery looking like for you?
Yeah, thanks, Greta. For us, it was a little bit different because we are still a relatively small company growing, and we more than doubled the size of the company during the lockdown, including the acquisition of Bionic, which we did last year. So first and foremost, our priority was around people and how do we keep people going, keep them safe, keep them mentally stable to go through this. And it took us a while to find our balance, but it took things like, making sure everybody can work remotely, provide counseling in different places across Africa where we have teams, still manage to keep our clients, which is, our B2B, we're in the B2B business, and FaceTime meant a lot before COVID, and try to find another ways to still keep that close relationship. So that was quite challenging, but I think we managed to get through it, including finalizing the acquisition of Bionic and closing it. Market-wise, overall it was positive, I would say, and I've said this publicly that a lot of the early alarmist sounds that we hear apply largely for cash type of businesses and less to digital. And what we have seen is as the lockdown moved from Europe to the US, South Africa, part of Africa, and so on, the traffic pattern kind of changed. And just, to remind everybody, we process mostly cross-border transactions between different parties, mobile money operators being a big chunk of our clients in Africa, but also money transfer operators, banks, global merchants. So we did it actually for the first 2 weeks, I would say in March, end of March, where kind of everybody got caught by surprise. From there on, it was a pretty steady growth as far as we were concerned. Things that have changed, though, are definitely how regulators look at this, and Angelica touched on it. I think before COVID, cross-border transaction and cross-border payment or remittance has always been seen with regulator with a lot of risk attached to it. And something that did not entirely make sense to us, which was like, a service that would be able to operate on a cash basis, but to move it to digital will become a whole process. So you could have a money transfer operator that can send cash into Kenya, but to allow that same money transfer company to send to M-Pesa will require you a whole process. What we have seen is a really streamline of that, and across the board, not just in Kenya, across Africa. A lot of regulators, and we have to give merit where it's due, that took extremely great steps to make it much easier for digital to thrive, and we have seen that as a result. The other thing we have seen is a huge, and probably less commented on, a huge shift toward digital by SMEs in Africa, more small and medium businesses who will normally, will still a kind of way aware of all these digital ways of moving money, pay and be paid. But we're a little bit lazy about it, I would say. And the COVID was a little bit of a shock. And we have seen a huge increase in demand by those small and medium businesses in Uganda, in Zambia, in Kenya, Rwanda, but also in West Africa, Cote d'Ivoire, Ghana, to be able to move to digital. And that is something that we definitely believe it will not be reversed. Last but not least, I think really around large money transfer organization in the world, even, and I will put this in banks as well, we have seen a huge acceleration of projects. So things that would have normally taken a year, 18 months of slow progress to move to digital have been compressed in a very, very short amount of time. So we've been able to launch partners that we've been talking to for maybe 4 years. We've been able to launch them in 4 months all of a sudden. And that again, I think it became something that, it is something that I believe will stay once that shift has been made. And pretty much all our partners across board, including Vodafone Group, Tigo, I think everybody has seen a growth in total processed value. Revenue is another story, but in general, the throughput through the system in cross-border or domestic across the board has grown. And I believe that will be almost a permanent trend for the next few years.
That is great. Thank you, Dari. I think you guys have set the scene really nicely for the rest of the conversation. So, Dari, I'm going to start with you on this one because you've been talking about cross-border remittances and the like. And, contrary to expectations of many, mobile money-enabled remittances did very well this year. So what was your experience of that, and how sticky do you think some of those growth drivers will be, and why? You talked about it a little bit there, but could you expand on that?
Yeah, I think for many years, we continue to undersell the convenience of mobile money. Mobile money for too long has been positioned as this product for poor people because they can afford better. I always argue that the convenience of mobile money is actually hard to beat. And in some circumstances, I will argue that it should attract a premium, not a discount. And this crisis has highlighted it. Like, we have seen people who will use this for the first time, and quite a lot of them for businesses. We surveyed some of the end users in East Africa, and a lot of people will still use P2P channels because they need to make some trade between Mombasa and Kampala. And once they've seen how easy it is in less than 45 seconds to actually move money across border, they tend to repeat it. And the next question is, why can't I do this with Ethiopia? Why can't I do this with Lagos? Why can't I do this with Abidjan? So I think and I have to say also, I've always been stoned by the number of policymakers who actually never use mobile money before. That because they quite frankly did not have a use for it, right? But all of a sudden they have to use it themselves. And we have heard a lot of marvelous things, especially the cross-border portion. I think people kind of took the domestic thing for granted now, but to be able to sit, in Kigali and make a payment straight to Lusaka immediately, like you will send an SMS, till that have that wow moment. And I think we have seen enough of that wow moment across the board, including with policymakers experiencing it for themselves, sometimes for the first time, that I'm quite positive about the stickiness of this going forward.
So I want to expand on this question and touch on something that's come through in the Q&A from the audience, because a lot of you have talked about adaptations as you've gone along, including regulatory adaptations. So I'd be interested in hearing from both Chris and Angelica in terms of the markets that you've seen, both, what those shifts have been. Chris, I think you mentioned something about merchant payments. That's been something that the industry's been trying to crack for a long time. What's been the impact on merchant payments? But also things like the regulatory adjustments that happened along the way. How meaningful were those during the crisis, and how many of those do you think are going to really stick and stay with you? And what impact is that going to have on your business going forward? So maybe let's start with Chris on that.
Yeah, so I think for us, on the regulatory side, probably the most meaningful change has been the very substantial increase in balance and transaction limits. And I think, as Dare highlighted, that's been particularly important for micro SMEs. And obviously, many of our we have formal merchants that we acquire, but also many of our customers we know are micro enterprises, and we know I won't name the market, but one of our markets. But we actually know that 25% of P2P transfers are face to face. So generally being used for payment, face to face payment, rather than more of a formal domestic remittance use case. So these increased transaction limits are really meaningful, especially for small traders. I think beyond that, as Dare highlighted, we're also, I very much agree with what he's saying around international remittances and cross-border. We're seeing quite a change in posture from the central banks in a couple of our key markets, where we're able to open up a lot of corridors that we've been waiting for, I think, some time for approvals on. So that's been very encouraging. There have been many other areas where we've seen really strong growth. I think P2P usage, we've seen, I think, a sticky increase in volume, despite the fact that charges are back to where they normally were, which is still low, around 1% on average of the amount that's sent is our pricing. So still low, but the price increase didn't result in a massive decrease in volume at all. We're substantially up on P2P from where we would have been. I think in other areas like merchants, I know Kenya has seen a massive increase in use of Lipa na M-Pesa, Pay with M-Pesa. And we've seen, I think we're not as advanced in the other M-Pesa markets, but we're seeing a similar trend. And, I think merchant payment transactions have roughly doubled in the last year, if not more. So been healthy there. But I think that more driven by changes in customer and merchant preference and behavior rather than regulatory intervention. We have had some constructive discussions in one or two markets around how we use the interest on our trust account deposits. So, we have billions of dollars held in trust on behalf of our customers, agents, merchants, etc., with a range of retail banks in each market. And there are different regulations. In Tanzania, we return all of that interest to customers. In other markets, we're quite restricted in what we can do with it. So I think there's still room for more change there and better policy, but I think we've seen some positive movement in that domain as well.
To learn more about that. That's a topic particularly interesting. Angelica, how about in your market of Tanzania? So how do you see the market adapting to these digital payment solutions, both on the customer side and on the regulatory side? And how do you think that may change things going forward?
We're starting with the regulatory side. As highlighted before, we've seen regulators now coming to us and asking us to work with them as an industry to find out what can we do together in order to support our customers better. So from their side, their involvement and their willingness to work with us has been increased. It has increased in the past few months. And also, they are able to give approvals faster than before. So we are seeing efficiency from their activities, because they now know that from the mobile money business, this is what will support the rest of the economy in order to move and make sure we have liquidity. So that support has increased. They've always been supportive, but in the last year, their support is even more, given the reliance of mobile money in supporting the economy. And maybe something else that is a bit unique in Tanzania is government payments. So the government is very keen, and most of the government transactions are actually done on mobile money. So we saw them even amplifying this further. So you look at maybe utility bills, water and electricity, the best way to pay for these in Tanzania is through mobile money. So we saw them encourage this even more to the customers. And also in terms of taxes. So paying taxes in this country, mobile money is the best way. So we have that support and push from the government that really gets customers to adopt and use mobile money even more. And in terms of customers, we've also seen increase in the value that they spend. So it could be the same customers, but between beginning of last year and now, we see them have increased their usage because we are seeing them trusting us more, and also the need, because the ecosystem is more digitized now. So they're spending more with us, and we see this is going to be the same going forward. So I don't see this changing in terms of, are they going to stick? Is this going to be their preferred mode of payment? So we are seeing that shift, and I think we'll just see more shift as we move forward.
Yeah, that makes a lot of sense. Thank you. So let's turn to the sort of business model aspect of this. So when you're thinking about the current economics of mobile money, how should providers, particularly given the experience that we've had in this big COVID disruption, how should you think about adapting your revenue models to lessen over-reliance on fees and ensure continuing financial inclusion for your customers? Dare, could we start with you on that one?
Sure. So, although we are not a mobile money provider, but we have huge stake in the mobile money industry, and we watch closely how the business model are evolving. I will tell you, from reviewing 2020 and going in 2021, there were three things that we thought will need to be double click on. We will need to dig on in the coming years. The first has to do with this idea of embedded finance, the idea, especially health insurance. I mean, if there was any time that health was top mind for everyone in the world, including across Africa, it was 2020. And we have indeed received anecdotal, kind of messages from of our customers, how much the fear of losing their job or ending up in hospital was actually affecting how they behave around sending money. So some people will then send a huge amount in one go in case they ended up in hospital instead of breaking it down monthly. Some people will really deal, kind of try and manage that risk somehow. So that is one thing we believe the industry need to embrace. We are doing our part. We actually started piloting something with MTN in Rwanda last year in the COVID to see if we can embed health insurance, hospital cash to be more precise, into some of the cross-border payments to allow people to manage that risk of not being able to earn an income or actually making that payment across border. And I think more attention needs to be paid into this because mobile money has reached a stage, and the numbers that came out of Sotil give us a clear indication that it is here to stay and it becomes a platform. And we need to, but also the industry collectively, mobile money operators, Angelica, Chris, and their colleagues, we all need to think about how do we use this to tackle this problem, health coverage for average person in Africa, or the most vulnerable person, I would say. The second side of it is credit, working capital, right? Because again, in this huge surge that we saw from SMEs embracing mobile money, they also discovered the problem of liquidity. And sometimes it's not that they actually don't have the money, but they don't have the money in that account that is connected that can make this payment. And because they can't get out, they can't go somewhere, or they can't collect the money, that becomes a problem itself. And I think we have to rethink a little bit also collectively, how do we grease the system a little bit? And not so much the consumer side, and I know there have been so many stories about consumer lending over mobile money in Kenya and other places. I don't want to go there. I'm talking about small and medium businesses across Africa coming to this digital world and experiencing this friction because the money is not at the right place at the right time. And how do we address that? It is certainly something that we are thinking about as MFS Africa. I quite frankly thought that the P2P fees will stay zero forever. I'm glad to see that Chris said they came back. But I still believe it should go to zero over the long time. I still think that, we should get to a point, we should use our collective imagination to treat at least domestic P2P like SMS. We should get to that point where it is that thing that we can give away and we can invent other revenue streams. And MFS Africa, we are certainly spending a lot of time on this, and we are engaging with our partners, not only on the remittance side, which it itself became a more important part of the overall revenue of the industry in 2020, but what else can we do to address the problem of health across the continent? What else can we do to address the problem of liquidity for small and medium business? I think there will be revenue opportunities there.
Yeah, that's really helpful. Angelica, let's put that question to you. You know, how do we think about this crisis changing the economics of mobile money, and how are you thinking about adapting the revenue models there in Tanzania to adapt?
I think one thing that the crisis has made very clear is our need to partner more. So we need to work together as an industry, as different, look at different businesses and how do we bring them to work together to make it easy for the customer at the end of the day. So within ourselves, myself, Chris, and the other players in the industry, what can we do in order to come back to reduce the transactional costs? At the end of the day, we are at a point where this is a critical business to everyday lives of our customers, and we need to look at how do we make that easier on their side. So I think we've pushed merchant payments as one of the ways as an industry, because we want everybody now to use merchant payments and go more digital. But again, is it something that we can make it even less expensive to our customers? So that is one key thing which brings a lot of collaboration and partnerships in order to reduce the cost. From the regulatory front, something is happening right now. We are working with the regulators in order to bring about a switch. So the aim for the switch to come together is to bring all players in order to reduce the transactional, the connection and transactional costs. So if we can achieve this as an industry, that means we can get more people to use our services at a lesser cost. So that is a very key activity that is happening, and we've realized that more than we could have this conversation at the beginning of last year. So now when we are having industry conversations, we have this as something we are really keen to bring to our customers.
Chris, let's turn this over to you. Is M-Pesa going to be zero rating transactions across all of your markets sometime soon?
Well, look, I think what's really important, I'll maybe beg to differ a little bit with Dario on this one. I think it's really important that we don't dogmatically transfer ideas of what pricing should look like from other markets like the US, Europe, or China, for example, where you have big players who also may have massive advertising businesses or e-commerce marketplaces, which they're monetizing very handsomely, and that allows them to make things like P2P free in order to grow their network and make their network stickier. That's a very sensible cost digitizing those funds, because everyone is frankly paid digitally nowadays in those kind of markets. And even Alipay and WeChat in China, all of their funding is coming from bank accounts, and the transactional fees of moving cash from those bank accounts into their ecosystem is almost zero. Africa's different, and our business model in mobile money is very different. In Africa, so I think my video just went off for a moment. Hopefully you can see me again. We're still talking about cash economies, primarily where agents and cash digitization are crucial. That means we have to incur very substantial costs in commission. It's a huge amount of our revenue goes back to our agents to make sure that they have the right incentives to spend time with customers, serving them properly, and maintaining liquidity levels, effectively stock of cash or money that otherwise they wouldn't hold, and then the whole network would collapse. So I think it's really different. What I will say, a few things, we're an email business in all of our markets. We're not a bank. So transactional revenue is all of our revenue. So overall, the transaction fee is going to go to zero. Absolutely not across everything. But I think we're thinking constantly, very carefully about our pricing strategy in light of how M-Pesa is evolving. I think we're very much on an evolution from being a domestic money transfer and also bill payment and airtime top-up platform to becoming a platform for cross-border payments and remittances, as well as a platform for other providers to offer financial services like lending and savings products. So because of that shift, this growth in payments and financial services, our mix of transactions is changing quite dramatically over time. So the inflow of funds into M-Pesa, when we started, it was 100% cash in. It was all cash coming into our agents, for which we had to pay commission. Nowadays, in some of our markets, 30% of our inflow is digital. That's from bank transfers, but increasingly also from international remittances, which are growing really well, thanks to partners like Dari. On the outflow side, so that's money coming in terms of outflow, more is going into payments rather than cash out. Now, we actually, we make good revenue on cash out, but we're seeing the share of funds going into cash out decreasing because it's rather being used for merchants who, in general, then cash transfer their funds to bank account. And we make little or no money on any of those transactions. So, for example, in Tanzania, when a customer pays a merchant, the customer doesn't pay anything and the merchant doesn't pay anything. So I think for us, that's the equivalent of making, certain players making P2P free. We're making merchant payments free at the moment because we think it's necessary in order to stimulate that part of the ecosystem. I think just one final comment, sorry, I'm taking a long time, but on P2P, our average pricing, like I said, is 1%. That's not very much. And bear in mind, a huge portion of that is going to pay our commission. So firstly, it's justified by the cost structure that supports it, cash in, cash out. And secondly, I think for our customers, it's not as if we're charging them for something that they were doing for free before. Beforehand, they were literally, using very expensive means of transfer. We're much cheaper than bank transfers, and we also far cheaper than the informal means like putting money in the hands of a taxi driver that customers were using before. So I think both in terms of value offered to the consumer and our cost structure, I feel our P2P pricing is very fair. And so I don't have any problem defending the charges that we're charging at the moment on P2P.
So Chris, I have a quick follow-up question to you because I know this is something that's been explored in various of your operations. Several major providers have separated their mobile money operations from their telecoms business. Do you think this is the future for the industry, a way for the industry to evolve?
It's a great question. Yeah, we've seen very big announcements from Airtel Group and MTN in the last couple of days. For me, I think there are three important things that are driving this whole conversation and also driving the deal that we did a year ago to form a joint venture with Safaricom, our sister company. So I think there's three big factors. Firstly, it's really important to have clarity on the performance of the mobile money business separately from the performance of the telecoms business. And that means that, a mobile money business shouldn't get freebies in terms of things like USSD messaging or customer care. For M-Pesa, every time one of our customers uses a USSD menu or calls the call center, the M-Pesa business is paying the telecoms business an arm's length fee, just like another third party, like a bank would for that service. So I think that's the first thing. Clarity on the financial performance of the mobile money business is really important. And linked to that, investment. If you have clarity on the financial performance, then you can invest with confidence in the future. And I think a huge part of the story of what we've done and what other players are doing is about enabling very accelerated investment, particularly as smartphone adoption is reaching that tipping point where customers are going to be looking for digital services, and there are really big opportunities for us to expand into new payments and financial services verticals. So investment's a second big area. Thirdly, I think unification. So in the past, I think mobile money's been quite fragmented. Within M-Pesa, we've got a lot due to local regulation. We have separate instances of our platform in every country, and those instances all have their own, the same core software, but different releases and different update cycles. And also when it comes to global partnerships, it's effectively 6 different businesses that companies, whether it's a payments player or MFS Africa for international remittance, that they have to partner with. So I think it's very crucial to have, a single API, but also a single place where you can sign a contract and get a settlement account and resolve disputes. So that's I think the third area, unifying. So effectively, we're becoming one M-Pesa, not 6 different M-Pesas. So the way we have done that, as I said before, is through a joint venture with Safaricom to create M-Pesa Africa, which will invest hundreds of millions of dollars over the next few years into the next generation fully digital, open, cloud-based M-Pesa platform. And we'll also expand global partnerships through things like a single open API for all markets that supports all the different currencies and different local pricing and everything. So yeah, we've done it through that JV. That JV doesn't own the M-Pesa business in each market, but rather the M-Pesa business in each market pays a fee to the joint venture in exchange for services. I think there are different models, and I think it's no surprise what Airtel and MTN Money are doing here.
Yeah, thank you. That's super interesting, and I think it's going to be a very dynamic space for some time to come. I'm going to go to a few of the questions that are coming in on the chat so that we can make sure that we cover what the audience wants to know. So let's start with something that Dari's mentioned, and I think a couple of others have mentioned this as well. There's been a shift to digital by SMEs in Africa during the pandemic. Dari, you spoke a bit about how you saw MNOs responding to support this shift in terms of processes, technology, and people operations. But do we see this trend continuing, and how will you continue to adapt to move towards serving small business as opposed to serving retail customers? Dari, maybe starting with you to expand on what you said earlier.
Sure. First, I just wanted to make it clear. I was with an MNO before, and I wouldn't make it free either. But I do believe that I'm putting this more as a challenge and an ideal for us, that to obviously sometimes, just like it was for voice for a very long time for MNOs, where it was such a profitable business that it took a long time to move to data. I wouldn't want the industry do the same and rely too heavily on P2P and not look at the future services that Chris is talking about. So obviously, at the end of the day, this is not charity. The sustainability of this depends on ability to make profit, and it is a responsibility of each of the players, including ourselves, to find ways to make that profit. To come to the SMEs, I think it's also important to understand the shift that was there, but was pronounced by COVID, and which is, who is the African SME, right? So 20 years ago, the African SME is the pop-in mom shop, selling some tomatoes, some oil, some rice, and microfinance, just to sum it up for you, right? Today, the African SME sometimes is a YouTuber in Abidjan, right? It's someone making dresses, taking pictures, and sending them through WhatsApp and organizing the delivery of that. So a lot of the SME, that trend has been slowly coming through in the last 10 years. I think it has been accelerated. So when we think about the average SME in Africa, it is a digital first SME. They have an email address. They can sign up on Google. They're probably using some website or some Instagram account or Facebook account and so on and so forth. Now, if you adjust your lenses to that SME, you start wondering now what the future looks like. Right. So as I mentioned, we haven't spoken to one that does not have at least a regional aspiration. So they could be making software for HR services in Uganda, but deep there, their dream is to service the whole of East Africa. Someone is making dresses in Cote d'Ivoire. Their dream is to sell in Lagos and in Johannesburg. So we do have this group of new SMEs who really does not see borders. And I'll actually joke with people that it's harder and harder to tell when you just look at the picture, where was this taken? There was a time I could tell you this was Lusaka, this is Nairobi, this is Abidjan. Now it's harder and harder. It looks the same, which is great. We should celebrate it. But what is missing is that ability to stay digital cross-border. And that's where I have faith that this trend that we see is going to be sustained, because it's not being driven by some sort of fashion or shock to the system, but is an undercurrent that has been there for years, that the new generation of entrepreneurs, whether they're doing, commercial in any field, entertainment to tech, whether they are social enterprises, and we've seen we haven't spoken about that yet, but a lot of social enterprises and a lot of gig workers. We are seeing more and more young people who know how to code and will sell that service to someone in Ireland, in Singapore. They too are digital. How are they going to get paid? So when you start shifting the lens to that, I'm absolutely confident that the future is going to be an acceleration of what we see, not a slowdown of it.
Angelica, what about for Tigo Pesa? Are you looking at the micro and small business segment, and how is that shifting the lens of what Tigo's doing in Tanzania?
I think Dara has put it very well. The SME for 10 years ago and the SME we are looking at right now has really changed because they are all digital. We have a lot of people on social media doing huge businesses that are looking for solutions to enable payments across the board without looking at borders. So we have that, and it's one of the growing areas we are looking at in terms of SME because we've seen the need and the shift of transactions from paper to digital because these people are already digital based. So this is an area that we are looking at to ensure we are able to give them solutions that can allow them to do transactions borderless. So I think that is very key. They're already online. They're already selling everything borderless. So how do we give them a payment solution that enables that to thrive?
Great. And Chris, how is Vodacom looking at the SME space?
I agree with everything my co-panelists have said, Greta. I think that it's a huge focus area, really exciting to see the new generation of MSMEs in Africa, and we're very keen to support them. I think the focus for us is on digital, so we've launched our merchant app in Kenya and very shortly launching that in all of the other markets. Along with that, we're doing things like launching merchant credit products. So in Tanzania, in partnership with Access Bank, we're rolling out a merchant credit product that means merchants will be able to actually, increase their working capital or enlarge their premises the more they transact with us. So I think, it's very much around offering a holistic solution for MSMEs. It's not just about payment. I think reality is customers and merchants are happy to work with cash for face-to-face transfers. But if we can digitally provide them with tools that help the merchant grow their business, whether it's things like credit and savings or loyalty and promotions, and also incentives for customers to pay digitally, then I think we're onto an area where we can really expand and really help to digitize this informal cash economy, which is still, I think, very much penalized because of its heavy use of cash.
I'd like to follow up on that and to touch on a couple of the questions that have come through on the chat around both merchant payments and interoperability. So I've been involved in this industry for a pretty long time, and as long as I've been involved in it, we've been trying to tackle merchant payments. And yet, looking at the latest State of the Industry report, merchant payments only represent 4% of the total money circulating in the mobile money ecosystem. Surely COVID has given a boost to merchant payments, and I think a couple of you mentioned that you've seen increases, but what's it going to take to really tip it into a much more digital ecosystem and moving out of the cash economy? What's going to get us there, and how important is interoperability of services in that equation? Chris, I'll start with you, but I'd like to hear from Angelica too, because you're part of that sort of interoperable system in Tanzania.
Yeah, I think you're right, Greta. I think COVID has created a new pain point around cash payment, right, which is that it's not very hygienic and safe. So the health risks have really meant that we've seen a very big increase in many of our markets. We've doubled the volume of transactions, customer to merchant payments. I know overall now we're close to the end of the financial year, so I'm not going to give a very up-to-date figure, but we're well north of 200,000 active merchants across our markets, which is an order of magnitude more than the number of bank-acquired merchants there are in our markets together. So we are really moving the needle. It's just not an easy, quick thing to do. And I think if you look at US and Europe, it's taken decades and decades to really shift from cash to digital, and that transition is still happening. So it's not something we do overnight, although I think we'll do it a lot faster than Europe and the US have done it. It won't take us 50 years, but maybe another couple of years. Like I said before, I think the key is the fact that, I think COVID has created a pain point around payment itself, but generally there isn't that much pain around payment. Customers and merchants are very happy to operate with cash. There's no obvious cost of it, and it's convenient because they tend to be working with cash in other parts of their lives. Where the pain points are more things like access to working capital and tools for merchants to differentiate themselves and grow their business. And that's really where we're focusing through digital tools, but also things like marketplaces that will be accessible to customers that are on a USSD menu still. So we're launching things like credit marketplaces and very sophisticated loyalty and promotions tools, both for the customer and the merchant.
So I noticed that you didn't mention interoperability as part of that, but I'm going to
Right.
turn to Angelica, and
It's
because
just
she's
a hygiene factor. Yeah.
sorry.
Just a hygiene factor. It's not going to make anyone do a merchant payment. It's just a hygiene factor. It's important, but it's not going to drive the transition.
Okay, great. Angelica, how is the situation looking for merchant payments in Tanzania? And do you see the interoperability there helping to make that a more seamless sort of hygiene factor in the market?
Let me talk about interoperability. Chris, I think, left it for me to discuss. So in terms of merchants, I believe we've come to a point where the customer doesn't really want to worry about who owns the merchant, how do I pay with a different user experience. We're at a point where if I want to pay, I should be able to pay regardless of who owns the merchant. So this is becoming a need in the market. And we are seeing, as we're seeing the shift of using more digital payments, customers want the convenience that maybe we did not have in our markets in the past few years. So we are looking at how do we really give them that. We've worked on we have used that information to improve our merchant solution in Tanzania, in Tigo Pesa, and we are looking at really how do you make payment by your phone, regardless of what network you are on and which merchant you're paying to. So that is bringing the interoperability in place. And I think it's very key to bring that convenience and seamlessness as far as merchant payments are concerned. So that is one area that we believe will increase in terms of how much is used on merchant payments. But also, as Chris highlighted, when you're looking at these merchants, they don't mind having cash. So why would they come to our platforms and use us instead of using the cash, which they can access immediately, do whatever they want with them? So we have to look at ways of giving merchants a reason to accept, and also encouraging customers to do that. So it's a push and pull factor that we need to still figure out. Apart from the seamlessness and the convenience, why is it a merchant will use us? So we have to really work out extra value that the merchant has that would come in different kind of solutions that we need to provide to them, ability to support them, their business in different kind of ways, maybe advertising and things like that. So what we really need to figure out is what does the merchant gain? Because plainly as it is now, in Tanzania, the merchant doesn't gain much and they want to use their cash because they can access it throughout any time, as opposed to if it's on the system, then it takes a bit of time. So it's really what is in it for merchants for us to crack that. So on the customer side, I think we've done quite a lot of work. Customers are happy with paying digitally, and they are also seeing the convenience, so they love it. But what about the merchant? What can we do there? So we haven't cracked that, and it's one thing we are looking into as an industry, as Tigo Pesa on our own. So it's something we need to push and make sure we give them more convenience to the merchants as well as the customer, and have pull and push factor to increase that.
Thanks, Angelica. So I see that we're running out of time, but I want to give the last word to Dare on the question of interoperability and merchant payments. I know this is pretty central to your business model, at least the interoperability side. Do you want to finish us off with any thoughts on that point? I think Dare may have dropped off. Okay, so then he doesn't get to have the last word. So we do need to close out. We've run out of time. I had a whole bunch more questions, and there were a lot in the chat, unfortunately, that we didn't get to. But I want to thank today's panelists, Angelica Pesha, Chris Williamson, and Dare Akuju, for an excellent discussion. I could have gone on for another hour easily. And I'd like to leave our audience with a reminder that this is just the first in a series of webinars on the 2021 State of the Industry Report on Mobile Money. The other two will be coming to a home-based screen near you soon. The GSMA team is going to be hosting these in the next couple of weeks, and details on how to sign up will be available over the next few days on www.gsma.com/Sotier. You can also find details on other upcoming events by following them on their LinkedIn page or via their Twitter handle. So with that, a big thank you to all of the panelists, and a thank you to the GSMA for hosting us for this really interesting discussion. Thanks very much, and have a great day, everybody.
Thank you.